Good day, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for Wednesday, the 18th of January, 2023, 6:40 p.m. Central Time. I keep getting my date and time wrong today. I am dizzy. We had a day today here that I don't mind telling you. My computer, I bought a brand new computer, and it's got a memory leak and some other problems that are going on. I had people from all over the world on top of the computer. Meanwhile, they took my whole trading day away from me because you got to be there and do certain things. They do it. And it's not fixed. They're coming back tomorrow online to see what we have to do. Hewlett-Packard, I might be very mad at you. It's a brand new one, and it's a top-end one of yours. I might be returning it. All right. So as we look at what's going on right here, today was one of the days where you get what you want and you don't like what you get. Schizophrenia day. You had retail sales come in weaker than expected. PPI, Producer Price Index, dropping. We had the Fed Beige Book showing weakness in a number of areas that are going on. All of the elements that the Fed wants to see. Yet the market, if you'll recall, has been fighting the Fed, saying they're never going to keep those interest rates going. They're going to drop them. So when you get what you want, is that bearish or bullish, the stock market? Think about it. It's bearish in the sense that everything's weakening. It's bullish in the sense that maybe the Fed doesn't have to keep going. Now, I was listening today to Mr. Bullard from the Fed. I'm listening to some of the other members. Some think we should go up 50 basis points, get this done at this meeting, others 25. But we're going to get a rate hike one way or the other. Then I look at what's going on. We still have good demand on the energy markets. Did you pay attention today to where mortgages came in? Mortgage rates just fell back to 6.04, not 2.4, 6.04%. They are close to getting back under 6%. It's not a bargain, don't get me wrong, but it's not 6.87% either. It's not near 7%. It's a market that is slipping back. So I'm fairly impressed with that. The dollar, okay, just hanging here. The euro got up, as you know, just recently towards 110. First challenge generally gets thrown back. Gold is still staying quite strong. Copper backing off a little bit, but it got today into the 430s. So that's good action overall, too. When you and I look at the S&P 500 index, I can make an argument at any point that there'll be a return to the 3862 area, the 18-day average of closes. When we take a look at a daily bar chart, I've made an argument to you that you're caught between this trading top high, that is a bottom, and you're very close to 50% of that range. That's what I've been saying, and that's where I think we're at. When we take a look at the March Micro Mini, have we broken the uptrend? We have not. You have a pattern of higher lows and higher highs. That is still bullish. When we take a look at where we're at in moving averages, I mentioned yesterday, not today. Generally speaking, the first challenge of a 200-day average, which is right here, is enough to throw the market back a bit. That's what I think is going on. The market got thrown back from there. And if you look at the Bollinger Band, it came right in today and yesterday at those numbers. Now, for those of you that haven't taken my enhanced Bollinger Band course, please take it and learn from this. This is exactly what I teach. It's so important. It's going to give you two guns to fire with in all the markets. And that is the beauty of it. You learn how to play with it. It's not your typical Bollinger Band. You've got to tie it together with slow stochastics. Do they embed? Don't they embed? Do you come out of the market as a whole or not? I was telling my traders today that there were so many markets that are ready to develop what I call bullish embedded readings that they have to probably fund their account even heavier. I said, but when that happens, it generally doesn't happen. What happens is the market gets up to the point just where it can do it, and it reverses course. If it was bearish, it flips up. If it was bullish, like we've had a number of markets, you get a bit of a correction. But those that stick with the embedded reading, you want to come into. At least that's my opinion. As you can see, the stock indices overbought, got again in the micro mini NASDAQ to the Bollinger Band 100-day average, thrown right back. There's nothing bearish yet on the chart. You got overbought. You either embed or you correct. I think you're going to correct to the downside. In the Dow, while I was gone, you hit a couple of days up here to the upper band and bang, right back to the 18-day average of closes. Now, tonight you have a low of 33.11. So you've taken this out. So instead of two arrows up, you're going to have an arrow pointing down and an arrow pointing up. You're out of the uptrend. And where did the market fail at the 18-day average? It's also correcting an overbought condition. And the strongest one had been the Russell. So what I was telling my subscribers this morning, I don't mind telling you that, is we had backed off. And let me just tell you what I had said, because it's there for them and I can prove it. I said, we're at a point where the market either embeds or it's going to lose it. And then in my written updates, I said, and I gave a detail today, in depth, as to what I said. I said, if you close near the day's lows, which you did, when you reopen the way the math works, you're probably going to lose the embedded reading. That doesn't mean you can't get it back later this morning. But at this point, you're under 80. You don't want to buy it at this point. Now you're waiting to see, does it embed? If you don't know what I'm talking about, at the end of this video, I talk about how you get that. At any point, you can move your cursor up here, and you'll be able to get into the course that teaches you how to do this. Two-gun pistols, you want to have them. You want to be able to fire from the bear side, from the bull side of the market, and understand when you get these type of readings where they do embed what to do, and when you're about to embed, understand that's where the market's either the most overbought or the most oversold, and the odds favor you typically don't embed. But when you do, it's gung-ho. When we come over to the VIX, one of the things I was saying is I thought the pros went short. Calls over here, right where I'm pointing. It was around 1958. You're at 2034, looking for the 18-day average of closes. That's what I still think will happen. I'm wrong if you make a new low on the whole move, barring that. I think that's where you're at. In the bonds and the notes, you're overbought up to the upper Bollinger Band so long. This is not the spot where you want to be, in my opinion, adding. It's where the pros are going to be taking money off the table. I think the same thing happened here. You backed off, and I still think you're there. But if you embed, I'll change my opinion. Now, what does it take to embed? You have to have at least 3 days, not including today, where the numbers are staying over 80. You don't have that. You have an overbought condition. It's that simple. So now you're just watching and thinking that the pros took their money off the table. In the dollar index, you had been running the band, the Bollinger Band, and now how many days do you have on a settlement, because it's not open yet, where you're underneath both numbers under 20? Today, yesterday, the day before. So now you've got your embedded reading fully at work. You see that? Day one, right here, that's Friday, Monday, Tuesday, and you're in. You got your embedded reading. Okay. So what do I think the pros are doing? I think today they went short on this rally. Now, there's a spot that I teach in the course. You're plotting a moving average. I'll share that with you, where you do that. But there are rules to do it. Do you take out the previous day's highs, lows first? What do? It's all taught to you, and you follow those techniques, and you get a game plan. I get some clients to finish a chapter of this, and they want to trade off of it. No. Finish the course. It's not a big course. Then you learn how to do it. I had one gentleman write me, I'm getting stopped out of this and that. I said, how far did you get in the course? I finished a chapter or two. Why is he writing me? In the eurocurrency, you came up to the upper Bollinger Band. And again here, let's you and I take a look. What did this market do? How many days did we have over both numbers over 80? Day one, Friday. Not here. Day one, Tuesday, day two, day three, and now you're looking, because there's a rule to it. I'm not going to share. I'm not going to teach you the course here. Does it stay embedded? It doesn't. There's nothing to do in the marketplace. In the British pound, you're at the upper Bollinger Band fighting to embed. It's still in the bull camp, very much so. Bitcoin, I was predicting, I told traders this morning, I said, if we count, we had 1, 2, 3, 4, 5 days in a row over the band. I don't think we're going to stay over it. If you go back and you do your counts, how many times you stay over under a Bollinger Band in futures, lead month consecutive. With one hand, you can probably count how many times it goes to the 6th day. And I'm not talking just this one. I'm talking do it in all the major futures markets. You'll be surprised. It's very, very rare. It can happen. There is no rule that can't be broken. But the percentages say you're going to pull back, and off that strength, you're going, oh, it's still a buy. But why am I buying up there? It might come back in. The odds favor that. Boom, boom, boom. In Brent versus WTI, still hanging here in the 520. So the differential hasn't changed very much. The market got up to the Bollinger Band. What do you think I would say as you're approaching the 100-day average and the Bollinger Band together? Run, don't walk. Get out of the market. The odds favor you're going to back off on that. What would I say in WTI? Run, get out. That's what I think you're going to do. Heating oil, I got the right name on it this time for you. Higher high, lower low. I've been telling my subscribers that I think that you're going to have a lot of resistance right here and you're overbought. There's no bargain to be had there. And in that gas, I'm still very much in the bear camp. Now, it's hard to get down to 275, and that's what bothers me. The momentum isn't here to just keep plowing into this market. Sooner or later, you're going to get a short covering rally. Do I think it'll go far? No. But, we're only at January 18th. Weather won't stay as mild as it is. You typically are going to go back down into the 20s and 30s. It'll sweep across the country. You'll get some demand for the market. It'll lift it up, but it's not, in my opinion, going anywhere. There's too much natural gas and not enough demand for it. That's what I think is going on. Now, you heard me talking about the Bollinger Bands. Take a look at this. Do yourself a favor. When you see it, remember, you can click at the top anywhere. It'll take you right to the course. I'm Ira Epstein. You have a good day. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.